How's it going, guys? This is Forensic Forks with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. As we can see here today on Wednesday, price gave us another large candle to the upside. Not to say it won't close large, but we can see it left a small range cycle from yesterday, Tuesday, and going into Wednesday, we can see price kicked off into a large range cycle so far. We have 7 hours till the candle closes. We can see price is still taking out previous daily highs, protecting previous daily lows, and rating swing high formations. So we just rated this swing high here. We're getting real close to that 20-day look back, if the look back high, right there. We can see today we had a New York session opportunity to go long. Let's take a look at that together. So go down to the 15-minute time frame. We'll bring it back just before 7, around the 15-minute time frame, and we're going to be utilizing 5 a.m. just before New York session. So we got that dead zone. And I tell people all the time, normally within this time period, you're going to see consolidation. And we can see we have consolidation. Prices accumulating buy stop orders and sell stop orders. So there's market sentiment being built up within these few hours here. This is going to be our London lunch session. So 5 a.m. to 7 a.m. The New York session is 7 a.m. to 10 a.m. We're going to be utilizing the swing lows, which is going to have sell side liquidity below it, and the swing highs, and that's going to have buy side liquidity above it. So we have two levels of buy side here. If we are following the bias of trend, we will look to see price go higher. We can see here at 7 a.m., price comes up and sweeps that swing high formation. So there could be a shorting opportunity here. Price is also above the 7 a.m. opening price, so it's in a premium. But if we're looking for longs, we want to see the counterparty liquidity pool rated. We are not really looking for the short setup if we're looking for longs. We're looking for the long setup after breaking the sell side liquidity. Yes, price breaks buy side here, but we're not really looking for that ideally. We're really looking for counterparty liquidity pools to be rated. So that whenever there's a buyer, there's a seller. So everybody that's looking to sell here, I will look to buy after breaking this low. Let's play it forward. You can see price sells off from that buy side liquidity pool. And we'll just take a little brief look and see what happens there on the lower time frame. So if you take a look, that same entry technique idea that we talked about, we have a fair value gap here that runs a swing low. Even another one here too. That would be an entry technique to go short. So that's just the idea on the counterparty, right, for the sell scenario. But since we're looking for long scenarios, we'd want to see a sell side liquidity rated and the same entry technique, but vice versa. So we're looking for a fair value gap. Let me play it faster. A fair value gap that breaks a swing high. So right there. There goes a fair value gap. And there goes our swing high formation. Let's zoom in on that. We would look to go long there. 1-to-1 scenario. Let's play it through and see what happens. Price taps it, and we get our long setup. And then price takes out buy side liquidity pools that we have here. This is where we are currently in price. We do have a news event that's going to come out shortly. So be careful. You don't look the trade while Powell is testifying, right? So leave that alone. But long setup happened here. Price took out that last buy side liquidity pool here and ran right into that swing high formation via daily that we're recently touching right now. Also, before we go on, Let's take a look at the DXY and the bond yields. So look at the DXY. So we see EU is going up. So that would only mean DXY should be going down. We can see that here. Ever since we got that false raid, right? A raid on buy side liquidity pool, buy stops, price is going lower, taking out what? A swing low formation, another swing low formation, and it's potentially reaching for this swing low too. So far, the only swing high formation that formed above March's opening price was at the beginning of the month, on the 1st, that Friday. That's a swing high formation. So right in this formation was most likely where the market makers had their net shorts kicking in, right around there. And now it's unfolding. And we're going to most likely see price tumble. Yes, there will most likely be retracements, or there most likely will be up candles. In these up candles, what are we going to do after that? If it's going to continue a bearish trend, we're going to sell. We're going to sell after those up days. Those are opportunities. Let's look at the bond yields for a second, because we know the bond yields are a direct correlation to the fiat currency world. Let's look at the US bond yield specifically. We can see the same thing. The 2-year bond yield is showing price selling off. Price broke a swing low. Wait for a lower swing high to form. It's there. Lower swing high. Up candle. What happens after this up candle? They're selling. Is the trend still bearish? Yes, it's still selling. Until I necessarily see signs for a bullish trend change, then I would flip my mind and say, okay, dollar's going back bullish. EU or any of the majors are going back bearish. As of right now, there's nothing that shows me that. Lower swing high formation. Lower swing lows. That's a swing low. That's a lower swing low. And we could even potentially see that this might be a higher swing low, right? But you still have 7 hours left. This could probably easily come down and take out the previous daily low, unless it's going to stay an inside bar, inside this candle's high and low. Odds are it doesn't. It's going to continue to sell off and target sell side liquidity pools. You can even see this one here, rated here too. A lot of sell side being taken out. Let's go to the 5-year. It's going to be very similar as well. Nothing changes. Swing low taken. This is a lower swing low. From there, 1, 2, 3. This swing low is lower. 1, 2, 3. That's a swing low. Lower swing high here. After the up candle, what happens? They're selling. Very small, subtle things can give you an edge in the market. Once you figure out the trend and you get indications like this, you're all set. Swing low broken, lower swing high. Right there. So as soon as price comes down here and breaks this swing low, you get a lower swing high compared to that one. Price continues to do the same thing, prints another lower swing high, runs out a swing low again. Up candle, also inside bar candle. This candle is inside this large candle's range from its low to high. It's inside. Normally after a day like this, you would want to see which side is broken first. Is this candle's high or low broken? If the low is broken, odds are it's going to continue selling. And you can see it sells off. We also have that double confirmation of it being an up closed candle and a downtrend. It's a lot of confluences here. Let's go down to the 30. Same thing here. Swing low broken. 1, 2, 3. Breaks right there. Price prints what? A lower swing high right here. It looked like it was going to form one here. And it did, technically. But it was a raid. You can see it raids that swing high. And it sells off. So this could have been a momentum shift, right? Price could have easily went back bullish. But instead, what does it do after breaking that swing high? Immediately reprices and takes out a swing low. So that would be our justification that this was just a buy stop raid and price continues to sell off. Same thing here. Up candle, they're selling. So there's very subtle nuances that can give you an edge on the market above the common retail trader. You're more informed because you're here getting the information from me, and I wouldn't try to lead you guys down the wrong way. I'll always try to put my best foot forward for you guys as much as possible. You can also see the yen crosses are selling off. So when dollar declines, you're also going to see yen increase. So let's take a look at the yen futures. See here, yen picking up speed. So last night we talked about this in the chat. I said that we're most likely going to see the yen increase in value. Not the fact that there's rumors about the BOJ lifting their negative monetary policy, because there's always been rumors. They always talk about, oh, we're going to do this, we're going to do that. There's rumor about this. They've been saying that for years. Eventually, the day will come when they will not have a negative monetary policy and they will increase their interest rates from being negative to maybe neutral and then positive. That day will come. But in the meanwhile, we're just following the price action. We can see that here, price breaks a swing high right up here. That's the start of the bullish trend formula. That's bullish momentum. Notice I'm showing you the same formula on many different asset classes and many different pairs. Swing high broken. What happens after price breaks this swing high? Look at that. There's a higher swing low that forms. It's not a double bottom. You got to zoom in closely to see it. Or is it? It is a double bottom, actually. So we have a double bottom here. Not justifiable, but I'll let this one go because we can see prices still continue trying to reach to break a swing high. I would prefer this to be a higher swing low. Actually, we do have one. It's right here. What am I talking about? Silly me. There goes the higher swing low. 1, 2, 3. There goes the higher swing low, and price is trading up. Got a down candle after that swing low. 1, 2, 3. Price is trading higher. Just to show it again. 1, 2, 3. That's the swing low. It's higher than this one here. So odds are price action is bullish. We're going to try and reach for a swing high and create higher swing lows and higher swing highs. That's your basic market structure, bullish. So hopefully you found this insightful. Let's look at EU before we jet off of here real quick. Daily updates are really short and concise. You know, we're not supposed to sit here for hours at a time talking about many different scenarios. I want to see price reach up and get the 20-day up the high. At that point, then I will consider, okay, maybe we might get a pullback. Maybe right back down into this down candle ranges here for a bullish order block theory and price trading higher. And then I want to see if price is going to print any down candles. After those down candles, I want to see price respect structure and move away from the down candles. Anytime we get any down candles, I want to see price trend away. You can notice in this small little blip here in the mid of February, we got a down candle here. What happens after that? Up. Then we have 3 consecutive down close candles. And what happens? Price easily overcomes that hurdle. Gets right back up above those highs. Also, if price takes out previous daily lows, that could be good opportunities to find buys because that's liquidation on sell stops. Anybody that might be long that has a stop loss below a previous daily low, price can easily run down, take out the low, and then run back higher. That's also something you'll notice in a bullish trend and anything vice versa in a bearish trend. Peace.